Good morning. Welcome to Stock Market Today. It's Monday, October 12th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. And I also give you daily stock ideas, or we give you daily stock ideas to consider. And that hits your inbox every trading day before the market opens. So U.S. equities higher on Friday. Market processing another round of coronavirus stimulus headlines. S&P 500 had its best week since August. Tech, consumer discretionary were your leaders. Financials were a relative underperformer with regional banks weak. Energy was also a big decliner on the day. Treasuries finished weaker with the curve flattening, so a little bit of an interesting change of pace there. The curve steepener has been the big trade. We'll talk about that a little bit later on in the show. Dollar was down on the major crosses. A lot of people out there calling for deflation, which would be dollar positive. We're just not seeing it yet. So obviously Monday we do our cross-asset themes. We're going to take a look at that one as well. WTI crude down 1.4%, near its worst levels of the day. Gold finished up 1.6% on that weakening dollar. So as we get to the desk this morning, futures are up 40 basis points after that rally last week. Asian markets were mostly higher overnight, with China up sharply on expectations that President Xi will announce reforms in Shenzhen. European markets are higher as well. Treasury markets are closed for the Columbus Day holiday today. The dollar is weaker versus the yen, but better against the euro and sterling. The Chinese yuan was the big story overnight as the PBOC cut the risk reserve ratio on forward contracts. Paying attention to the currency markets, you'll see that the Chinese yuan has been strong of late, and it has obviously gotten to a level where the Chinese government has said that's enough for now. And they're looking to weaken the yuan here in the near term. Gold little changed this morning. Crude down 1.4% after that big 10% rally last week. So that's the framework. Expect some light volumes today with bond market closed for the Columbus Day holiday. So let's take a look at the charts here. SPY extends its breakout, starts the week with a neutral rating. Strong breakout for the Qs, but sees its rating turn neutral this week. Take a look at, if you're inside of Chaikin Analytics, you can see that an interesting development played out over the weekend in our ETF ratings, where SPY stayed neutral. That's fine. That's been the case. Qs turned neutral from bullish, while IWM turns bullish from neutral. QQQ up and out above 280. We think we're playing for the highs, right? SPY above 343. We're playing for the highs. And now with the break of 160, IWM is playing for its highs, although its highs are from back in the beginning of the year. So framework here for the major markets is bullish. What I think is interesting now, last week, remember, we talked a lot last week about strength in small caps, and we started out by saying, well, that's just a great breadth confirmation. Now, breadth metrics, we looked at that again, have been improving even for the S&P 500, then layer in the small caps. And now what we've seen is small cap outperformance led by the growth theme within small caps. Go back to the work we did last week. We showed you growth in value in small cap land and said growth looks a lot more compelling. That does remain the case. But the simple fact of the matter is when we roll all that up, IWM now has a bullish rating. And the Qs have a neutral rating. Now, that's not to say that the Qs can't work higher. And we still like the Qs. It still fits, our thesis of stagflation. So until that changes, we're not going to change our view, right? A neutral rating, while still outperforming SPY, is still compelling to us. But I think the biggest dynamic this week, the biggest shift, is IWM catching an ETF rating upgrade here at Chaikin Analytics. Take a look at IWM today. Let's look at our market in a minute now. Stocks break the range as stimulus hopes remain alive. Small cap turns bullish. The Qs flip to a neutral rating. Treasuries are under pressure. Rating moves to bearish on IEF. And remember, we've been talking about the curve steepener, and it's playing out. So IEI, short-term treasuries, are neutral in our model. IEF, intermediate term, are bearish. TLT, long-term, are very bearish. So that jives with the curve steepening. Commodities stuck in the range as the dollar test key levels. Futures point to a higher open today. Our power bar perspective now, not a ton has changed here from Friday. Dow 4 to 3 after adding 54 basis points. S&P 500 up 86 bips, 130 to 58 bulls to bears there. NASDAQ actually an outperformer on the day. So outperforms on Friday, gets a downgrade over the weekend. Okay, it is what it is. The model's quantitative. NASDAQ up 1.5%, 30 to 5 bulls to bears there. Small caps up 50 bips, 763 to 228 bulls to bears. Bonds, let's call them flat. Tech, your outperformer. We continue to like the growth theme, but we also continue to like the theme that leverages inflation. So we've been talking about it and we've gone through it, right? So we've been adding cyclical exposure where it makes sense while maintaining exposure to growth. That is what we think makes the most sense here in the near term. So take a look at tech, but also, be mindful of materials and industrials. And as we started to talk about late last week, signs of stabilization in the financials on a relative basis. Let's start our stock of the day. Speaking of tech, speaking of small cap, Cohu, COHU, very bullish ETF. Very bullish Chaikin power gauge rating. Strong trend, strong industry group. You've heard me pound the table on semiconductors multiple times. So what's interesting to me about Cohu is well, semis have been strong. Now small caps are getting stronger. Now we have early signs of a personality change. Cohu flipping here. Now it's early days, but we're keeping an eye on it. I actually have a screen that I run where I screen for these so-called personality changes where the rating and relative strength inflect positively, and that's what's happened here. So we have Cohu going sideways, now breaking top side, solid bullish money flow. Now, as is often the case on breakouts with a change of character, it is overbought in the near term, right? So overbought doesn't bother me as much on a breakout with a personality change. Because it's the start of a new trend. I would expect to see the stock overbought if we are in fact starting a new trend. So Cohu is being featured in my note today. It looks interesting to me, and I'm featuring it here on the show. So little value add. This is something that our clients at Chaikin Analytics are getting extensive analysis of, and I'm flagging it here as well on the show. Let's take a look at our sector tracker now. Movement of the last 5 days. Materials at the top of the list. What is my favorite cyclical sector? Materials. Energy, counter trend move here. I'm not there yet. Now, a lot of people are calling a bottom in energy, and maybe those people are really smart, and they will prove to be right. But the analysis that they've gone through could have been made at any point in the past year. Sentiment's just gotten worse. That's interesting to me, but I'd rather wait for the turn. So if I was looking to go bottom fishing in kind of garbage areas of the market from a relative standpoint, i.e. the areas of the market that have been big underperformers, I'd rather go financials. There are earlier signs of stabilization there. So that's something I'm keeping an eye on. Now, the conundrum for me in the market right now is the fact that utilities are so strong on a breakout. I don't know what that's telling us. It's telling us one of two things, that something's wrong under the surface and investors are positioning for it, maybe, but evidence points the other way, especially in light of breadth. Those of you who read Mark Chaikin's note yesterday, where he does a deep dive on breadth and some of the work that I did last week on breadth, doesn't quite yet tell me that there's something wrong under the surface. So what I think is playing out in the utilities is yield chasing. Treasury yields, curve steepening, some weakness in utilities, some weakness in treasuries, but fixed income investors feel like they need to put that money somewhere, so maybe they're rotating into the utilities. All groups are higher over the last 5 days, so that's encouraging, and it's nice to see tech back at the top of the list. Healthcare, industrials, financials, industry, and discretionary are middle of the road. Staples, comms, and REITs at the bottom of the list. I don't mind seeing that. I'd like to see comms higher, but remember, we do have Congress looking into the big comm services companies. So we can, whether you agree with it or not, it's happening. Whether you think big companies like Google and Facebook have some sort of monopolistic power, we can debate that all day, but it's happening, right? So it's a potential headwind to those stocks here in the near term. Our industry in focus, mining services, you know how I feel on this, right? I've been stagflation for a while. So the inflation portion benefits mining. And over the past 6 months, that's played out, right? 17.8% to the good relative to the S&P 500. Power bar ratio, 12-0 bull to bears, so it's very strong. That's a look at future potential. It's currently ranked number 2 of 21 subsectors, and it's moved up 2 slots over the past week. So names like Alcoa, Reliance Steel, and Schnitzer Steel, SCHN, very bullish. RS, Reliance Steel, very bullish. And Alcoa AA, very bullish. Ratings here at Chaikin Analytics, and our holdings of an ETF that looks like a consolidation within a new uptrend. Bullish ETF rating, 12-0, bulls to bears on the ratio, as the trend is strong above the rising long-term trend line. We can see that here. Overbought with bearish money flow, so not necessarily a chaser here for me right now, but still an outperformer. So it's interesting. I'd rather do the work at the stock level than play with an ETF that has this kind of look to it right now, overbought with bearish money flow. Dig into the stocks. Let's do the extra work. There are 12 bulls there to take a look at. Let's look at what's trending now. Friday's movers and shakers. Xilinx, AMD. Xilinx up, AMD down on chatter that AMD is a bidder. eBay, no news. Software strong since Fortinet higher. Positive mention by Jeff Smith at an investor conference. Sends CTVA to the upside. NC, no real news there. Loser side of the board. Nielsen, I have nothing for you. APA, energy was weak. Mohawk, I have nothing for you. AMD, chatter on the bid. SPG, I have nothing for you. In terms of company-specific news to send those names lower. Earnings season going to kick off this week. Let's look at Treasuries. Treasuries are under pressure. What I'm giving you here is IEF, and I think this is interesting because IEF is breaking down. This is kind of the belly of the curve. So let's kind of use this as the fulcrum point, right? The middle of the curve is IEF. TLT is out on the long end. SHY and IEI are respectively out on the short end, right? So what we do have is weakness. There's no two ways about it. Our thesis of stagflation, our view that stimulus is a matter of when, not if, and how much, which is really important. We saw the White House raise its bid to 1.8 trillion. Nancy Pelosi and Republicans in the Senate, frankly, both rejected that. Nancy, Miss Pelosi, still sits out at 2.2 trillion. So the bid-ask spread is narrowing, but stimulus, inflationary, bad for the long end of the curve. So take a look at SHY relative to TLT. This is essentially a proxy for the yield curve. You can see it here steepening. Okay. When the short end is outperforming the long end, that's curve steepening. That's the trade that's been put on. Some of the readers of my market survival guide, which is published on Tuesday, will recognize this because about 2 months ago, we started talking about shortening duration within Treasury investments. So that's largely played out and continues to play out. So Treasuries week. What's interesting, though, now is our ETF model. TLT has a very bearish rating. IEF, the middle of the curve, has a bearish rating. IEI at the shorter end of the curve has a neutral rating. So the curve steepening is playing out in the market, number one, and it's also being reflected in our ETF model. So I find that extremely interesting. So you can see Treasuries here under pressure. The key is going to be, do we just kind of flop here sideways? It's still very much a range, just pressure in the near term. Do we flop sideways, give this 200-day moving average a chance to catch up and then work higher? I don't know. That would be a deflation theme. And it's possible, but for right now, the stagflation theme continues to be my base case. I know there are some folks out there making the deflation call, and it might play out. I just don't see it yet. And we're going to talk about why in a little while. Number one, gold, not breaking the way that I thought it would, quite frankly. So I'm watching gold here as it breaks this trend line to the upside. Some follow through's got to get me incrementally bullish. Now I backed off my bullish stance on gold with a breakdown here, and I want it at 1,800. I really do. I think that would be a really compelling spot to grab some, but market doesn't care what I want, so we have to be flexible to a move to the upside. And take a look at the dollar here breaking down, right? So if you were playing for deflation, you'd expect to see this dollar going higher. So far, that is not the case. Ton of wood to chop overhead, and now breaking the uptrend line on the RSI. So momentum no longer with you to the upside if you were dollar bullish. And as that plays out, we get the commodities working higher once again. So that'll wrap us up on a Monday. Have a great start to the week. Take us for a test drive. I will be back with you tomorrow.